This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices edged higher on Thursday in thin trade ahead of a long weekend as traders weighed news of a possible European ban on Russian oil imports against a larger-than-expected build in U.S. oil stocks and falling refining activity in China. Brent futures were up 42 cents, or 0.4%, at $109.17 a barrel, while U.S. West Texas Intermediate futures were 23 cents or 0.22% higher at $104.39 a barrel at 12:23 ET or 16:22 GMT. While the European Union has not imposed a ban on imports of Russian oil in response to Russia's invasion of Ukraine, the New York Times reported that EU officials were drafting an embargo on Russian oil products.
Payment for Russian gas in rubles by European Union buyers is demanded by President Vladimir Putin would break the EU's sanctions regime against Moscow, an internal European Commission note said. Putin has warned Europe it risks having gas supplies cut unless it pays in the Russian currency as he seeks retaliation over Western sanctions for Moscow's invasion of Ukraine. The European Commission's note, making clear it is technical, preliminary, and based on an unofficial translation of the Russian presidential decree of March 31, said the law added several new layers of obligations on EU gas buyers, taking the effective completion of the purchase out of their hands.
Moving on to the top news in the energy sector.
Major global trading houses are planning to reduce crude and fuel purchases from Russia's state-controlled oil companies as early as May 15, sources said, to avoid falling foul of European Union sanctions on Russia. The EU has not imposed a ban on imports of Russian oil in response to Russia's invasion of Ukraine, because some countries such as Germany are heavily dependent on Russian oil and do not have the infrastructure in place to swap to alternatives. Trading companies are, however, winding down purchases from Russian energy group Rosneft as they seek to comply with language in existing EU sanctions that were intended to limit Russia's access to the international financial system, the sources said.
Chinese refiners are set to cut crude throughput this month by about 6%, a scale last seen in the early days of the COVID-19 pandemic 2 years ago, to ease bulging inventories as recent COVID lockdowns undercut fuel consumption, industry sources and analysts said. Refiners are expected to lower crude oil processing in April by 3.7 million tons, or 900,000 barrels per day, BPD, equivalent to 6.3% of average national throughput in the latest annual figures, according to estimates by 6 industry sources and analysts. Slowing demand at the world's top crude importer would help to cool global oil prices, which remain above $100 after touching 14-year peaks last month, buoyed in part by supply disruption fears following Russia's invasion of Ukraine. Next, we have the top news in metal markets. Copper prices edged up on Thursday, buoyed by expectations for higher demand on the back of an injection of stimulus from top metals consumer China. The Chinese cabinet said that China will use timely cuts in banks' reserve requirement ratios and other policy tools to support the world's second biggest economy in the face of the latest COVID-19 outbreak. China, which accounts for nearly half of global copper consumption estimated at 24 million tons, is scrambling to contain a COVID-19 outbreak that threatens to sap economic growth and disrupt supply chains.
Global steel demand is likely to grow 0.4% to 1.84 billion tons this year, slowing from a 2.7% gain in 2021, hit by the uncertain outlook created by the conflict in Ukraine and rising, the World Steel Association, WorldSteel, said on Thursday. The expectation of a continued and stable recovery from the pandemic has been shaken by the war in Ukraine and rising inflation, WorldSteel said. The impact will also be felt globally via higher energy and commodity prices, especially raw materials for steel production, and continued supply chain disruptions, which were troubling the global steel industry even before the war.
We will now look at the top news in the agricultural sector.
Severe outbreaks of bird flu in the United States and France are tightening global egg supplies and raising prices for the food staple as the war in Ukraine disrupts shipments to Europe and the Middle East. Higher prices are particularly painful for consumers who rely on eggs as a low-cost source of protein and substitute for more expensive meat. Demand jumps around the Easter and Passover holidays in the United States and Europe as families use eggs to bake and dye Easter eggs. Bird flu has wiped out more than 19 million egg-laying chickens on commercial U.S. farms this year in the worst outbreak since 2015, eliminating about 6% of the country's flock, according to Reuters calculations of federal and state government data.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.